Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And the company on KYC's radar today is Prostarm Infosystems. This company was, of course, recently listed. Not much data regarding the company, but yes, we have seen the overall research happening and there's a lot of questions regarding the stock itself. Recently, the stock was listed. Anushi, I think it was the June month when the stock was listed, right?
Around a 19 to 20% of a listing premium is what we had seen that time. Yeah.
Well, the question remains is why are we actually getting this company?
Right.
There are key concerns, of course, for the investors and maybe the prospective investors. The first question is how are the order book trends or the client confidence looking like? That seems a decent question to start with, but then, of course, as we peel through the onions, there are some questions which will be raising some eyebrows. How will the company stand against its MNC giants? And of course, we'll be discussing about the company as well going ahead. But the new foray, battery energy storage system, that's like the mantra of the entire industry right now.
All of these companies,
everybody's talking about, going into this
space.
Yes. So let's see how much it's truth and how much it's executable. Higher debt levels. After IPO also the debt levels are at the higher levels. So we need to ask, where's the progress of this debt reduction? So these are some key questions, I think, which we'll be actually looking out for. And of course, lastly, what is the actual moat of the company? Company is doing 2 or 3 announcements. Where does the company actually stand? But let's just give our viewers a flavor of what the company is all about. So of course, the company, they have run advanced UPS systems, lithium-ion battery and end user computing. The numbers, the jargon, it's very technical. We'll try to decode it for our viewers in a simpler manner. And this is a big announcement coming in. They have around 750 customers, 1 lakh installation and 3 operating manufacturing facilities, and maybe 1 facility will be coming online in some months as well. Key competitors, these are very big global names, Anushi. Schneider Electric, Vertiv, Delta Power Solutions, their size is also very huge. But there are certain questions. I think I would like to just ask, what is end user computing? A lot of viewers are asking me, Sharad, what is it, this company all about? There are so many new things coming. Can you just decode that jargon?
Right. So, we've already spoken about the power side of the business. This is another area that the company has been increasing its contribution to. It's around a 94 crore of a market that we are looking at in comparison with about 2 crore last year. What it essentially does, it delivers end-to-end IT hardware solutions. So this includes all your notebooks or desktops or all-in-one systems as well. So it's basically reading side of a setup that we are looking at. So that is on end user computing. But just a little bit about the IPO as well, if you're talking about that. We already spoke about it, that they marked an entry in June 25 and they came out with a total issue size of about 168 crore. This is an entirely fresh issue that we had seen. Proceeds to be utilized towards funding working capital requirements of the business, along with that for repayment of debt also. Now that amounted to something around 18 crore or so. And of course, the other would be to look for more inorganic growth opportunities as well. So we'll be quizzing the management about the last 2 questions, especially about the debt repayment, also about how they have deployed these IPO funds so far. But let's take a look at the FY25 business mix as well. So if we are just drawing that on board, manufacturing power solution products, that makes up to 35% of the mix. Third-party power solutions and other products also 32% of mix coming from here, while solar EPC contracts and value-added services see about a 6% of contribution. Now, with most of their order book shifting towards the BESS side of the business, it's interesting how this would change going forward, right, Sharad?
Correct. And if you look at it, the numbers, if you are adding up and if you're thinking it's 100%, it's not 100% because other services are also there, other revenue segments are also there. That's why it has been put up. So we are seeing a variety of businesses the company is doing under one head. Now, of course, the question arises is the manufacturing plants. I would just like to, go faster. Pune plant, they are having a UPS system, while they have a second plant for the solar hybrid inverters. And lastly, there is a lithium-ion battery pack as well. So futuristic manufacturing plants, 3 are operational, 1 is in the offing. But let's get back to our show. The rating parameters, Anushi, that's the most important thing which our viewers actually look for. And if you look at it, we are having income statement, balance sheet, cash flow, return ratio, shareholding, street trade, valuation, and outlook. And out of these 8 parameters, we will be giving the numbers so that you get a clear picture, a 360-degree analysis of the company, and later on the management will also be coming in. So we start firstly, Anushi, what do you like to say about the income statement? What are your views on it? They look prima facie decent?
Yeah, So what we are looking at is an overall decent set of numbers in terms of where the revenue growth is concerned. It's a 26% of a CAGR growth that we are looking at over the last FY22 to 25. If you are taking those fiscal years in account, while margins also in these particular fiscal years have ranged between that 12 to 14% of mark or so, the question would be, what's the kind of sustainability that we'll see in terms of the margin profile, considering the first quarter we did see a dip in terms of how the margins have panned out. Net profit, a 36% of a CAGR growth that we're looking at. So considering the previous fiscal's performance, we've given this one a thumbs up, right?
Well, yes, but of a balance sheet, I do have some apprehensions, Anushi, especially if you look at the debt numbers. That number has not reduced, and of course, we will be quizzing the management is after getting the IPO proceeds, when will the debt start going down? What's the timeline? But the numbers have spiked up. It's almost up 50%, 67 crores of borrowings coming in. Not much to look at the book value, but the cash and bank, that's an area of concern for me. If you're looking at a big size, you need a good, decent cash and bank balance as well. It's a high working capital intensive business. More loans will be coming in, but the liquidity ratios need to shore up. With such a big size of a company, you're just having 2 crore cash and bank balance. So that raises some questions as well. From my side, Anushi, it's a neutral.
Right. So for cash flow, we have, accounting for all that we spoke about, we've given cash flow a thumbs down, because if we just see the previous 3 fiscals, a negative cash flow is what we are looking at. Now the business wants to utilize towards, is expanding in terms of how they want to utilize their working capital requirements. So if there is improvement in terms of the management commentary on that, that is something that we should be watching out for. But considering the EBITDA and the net cash flows also, it's almost negligible that we are seeing. So far, for now, we've given cash flows a thumbs down on that basis.
Well, of course, so it's basically even Steven still now, we look at the financial statements. But return ratios, Anushi, that's on the higher side. I would like just point out the ROC numbers. That's for FY23, it was 34%. It's 28% and 25%. So it's kind of actually going down. Now, of course, we will be quizzing the management. Is there an extra balance sheet pressure? Whenever these numbers come, there is a pressure on balance sheet, whether it's debt or it's over expansion. That is something to look at. ROE numbers also, you look at it. It was 40%, 32%, and now you see there is a slight downtick of 30-odd%. Net, the return ratios, however, still, if you look at the industry average, it's still on the higher side. And let's give some time to the company as well. It's just, just been June is the month which Anushi was talking about when it was the listing. So we should need a much more better data to actually understand and give us our ratings. But initially, for the time being in the industry itself, whatever limited data we have given a thumbs up here. Anushi, what would be there for the shareholding patterns? I know it's just 2 quarters of actually seeing the data, but something is there, right?
Yeah, before I just go to shareholding, a quick point about return ratios is also that we are looking at this dilution because of increase in the equity capital as well. Now, since there was IPO in picture, so the base has increased. So from now on, how the ratios would be sustained as something that we should be looking out for. Because if you just look at prima facie, the 25% to 30% number, that seems on the healthier side, as Sharad just spoke about, that versus the industry average. But quickly coming to the shareholding part, we just have 2 quarters of information as of now. While promoter stake remains healthy at 73% odd level, FII and DII stake has gone down considerably from 4% to almost 1% of a ratio is what we are looking for FIIs, while DIIs have also offloaded their 2% stake to about just 0.7% now, while the public shareholding has increased to about 26%. So more time awaited for this particular piece of information going forward, right?
Well, yes, Anushi, but the most alarming part which I saw is both the institutions, their stake has come down below the 1% mark. That means it's technically an exit. And of course, as we go forward, there will be a lot of months where lock-ins will be coming in.
Right.
So we'll have more of these exits likely. And if that happens, we see the retail position going up. And whenever there's a lot of retail position going up, it becomes a distribution kind of a move. And that is why I think for shareholding, you have given a down, thumbs down as well. But moving on, the second last parameter to focus on, that's the street cred. Anushi was speaking about the recent IPO performance. And if you look at the company itself, on listing day itself, it came at 120 rupees. That's more than 10-15% odd listing gains as well. Currently, since listing, the stock is up 56%, and there has been a sustained buying and support. Anushi is coming from the retail segment, that's a very interesting thing. So net, I would give a neutral rating on this because the timeline is not there. So that's why I would suggest let's keep it neutral for the company. But there is a last parameter which you look at. What would that be?
Well, let's talk about valuations. Is this the right time to buy or enter? That's the question we should be asking. Now, if you just look at the price multiple, 25 times versus its peer, which is Servotech Renewable that we are looking at, there's a vast difference that we are looking at 25 times versus 84 times. Now, what is the kind of growth picture, the cash flows, the debt profile, all of these have to be accounted before we just look at this one multiple in particular. But for this metric, we've given it a thumbs up, right, Sharad?
Well, correct. And I think let's revise the entire, report card. What our special show is there, what our rating numbers are there. If you could just get our ratings in income statement, we had given 1 positive. It was balance sheet, largely neutral, cash flow on the negative side. We've given a thumbs up for return ratios. And going ahead, let's look at the shareholding portion. That's on the negative side. Street largely neutral, but valuations still favorable as compared to its peer. Outlook, largely you could say it's neutral, and I'd just like to point out the new segments they are entering. That is something Street will be watching out for. Currently, the KYC final rating, that comes in at 4.5 out of 8. So the company needs to prove more. They need more time. And of course, they are doing so many things at a single time. So of course, the time will say, and how the prices move. But overall, right now, Anushi, the retail is holding up the stock.
Right. Well, so that is what we are seeing for Prostarm right now. But with that, let's welcome in the management as well. Ram Agarwal, the CEO and whole-time director, is with us to talk to us about the results that we are looking at. Thank you so much for taking out the time to speak to NDTV Profit. I just want to start off the conversation. You recently had your IPO, you had the proceeds. Now, what we are seeing is that in the last 3 fiscals, there have been negative cash flows. Will this improve from this FY26 period onwards? My first question is regarding that.
Yeah, Namaskar. See, first of all, thanks for having me here. I would like to say that our negative cash flow has improved in last 1 or 2 financial year, and it will substantially come down by next financial year because we are working hard on it, and it will definitely will improve further.
Okay, so just want to take this in account that what is the kind of debt picture that we are looking at, because if you just see the FY24 to 25 value, we've in fact looked at an increase in terms of where the debt number is concerned. So just want to understand your overall plans for debt reduction. You already had a plan of around 18 crore of debt reduction in your IPO proceeds as well. So how have you deployed those IPO funds? Can you give us an update on all these key parameters?
See, our debt ratio has come down substantially. As on today, our cash fund-based limit used is only 7 to 8 CR. Our major fund debt is used against non-fund-based, that is bank guarantee. It is around 75 CR as on date. Whatever IPO received we have used, we have paid 18 CR for one term loan debt, and all other fund has been used for our regular cash flow, and some has been parked for using against this acquisition and capex investment.
Well, that's pretty interesting. You mentioned the debt and, of course, the overall, interest rate costs and how things will move ahead. Anushi had asked, but one more question remains is, and your company, largely the revenue numbers, when we and Anushi were checking the investor presentation, that was ranging between 80 to 85%. So the company has a huge exposure to the government segment. Now there are problems of execution comes, payment comes. So where is company positions in that, and how is company actually helping itself out, or safeguarding itself when it comes to the B2G orders?
See, I'll tell you one thing. Our product is a last mile product. It's a capex product. So we generally bill at the end of the project. Generally, it is happen at the end of quarter, end of the financial year. So in the balance sheet, the number goes up immediately. But if you see the last 2-3 quarters, the collection is happening. Yes, there is some delay in the execution, in the collection of the government, but there is no any bad debt. First. Secondly, going further, we are working hard on increasing our business portfolio, and if in this current financial year, you will see substantially rise in the private sector. We are focusing more on the product side, where to increase on B2B business in the current financial year. And overall, the number at the end of the quarter, at the end of financial year, you will see a good change in the proportion of the breakup of the sales.
Uh, Ram sir, if you could just give us the breakup, roughly I think it's 15%. So will that touch around 25 to 30% at the end of this year? If you could
Yes,
just
yes,
quantify.
yes. Minimum. It should be minimum. I can't give the exact number, but it will be
Yeah, range will be
20%
fine.
above.
20% above. Fair enough.
Mr. Agarwal, just want to get, because, with this overall capacity additions that you have in plan, what's the kind of outlook that we should be building for FY26 in terms of top line as well as margins? 26% of a CAGR is what we've seen in the previous 3 years. Is that expected to sustain, or do you see a further uptick also with the addition of more of these segments going forward?
Tell you. I can't give the actual numbers to you. I have some limitation. But if you see our last 3-4 year growth and our top line and bottom line, if you compare those for last 3 to 4 years, I can say you that next 2 to 3 years will be much, much better. We are working very closely on the reverse integration in our manufacturing facility, and lot of new product is coming up in the UPS and inverter, which will add up a new revenue model, new revenue segment for us. So it will overall increase in the size of the manufacturing capability as well as the manufacturing product sales in our overall portfolio.
Okay, and what about the margin profile? Because, in the previous 3 fiscals, it's been in the range of 12 to 14%. But in the first quarter, it came down to 7%. So just want to understand in terms of the shift in terms of margins.
Quarter-wise, I can't comment. There are many factors where quarter-wise I can't justify. But when you compare the financial year number, it will be totally different. And I'm with very confidence, I can tell you that it will be better than last year.
Okay.
That's a pretty interesting focus on that. But of course, main thing which of course the investors have been asking us is to ask about the order book. So suppose this order book status, what's the actual breakup like coming in, to give us more clarity? And also before that, can you just explain us what this end user competing segment means? There seems kind of in the investor community that what this business is actually there, because significantly now the orders have started coming in this segment. So could you first, just for our sake of our viewers, just define this segment, what it actually is, and then we'll go ahead with the order book story.
See, end user computing is nothing but an e-governance project of the state and central government, where we have our own product like power conditioning equipment. We call it UPS, inverter, whatever. So earlier we used to quote to the partner where they bid for the project, and in some cases where we are qualifying, we are justifying our presence, we are bidding directly with in few projects just to gain credential, and it becomes a business factor for us in the future. Last year, if you see, we have done one end user computing project where our margin was very low. But because of that, we are getting qualified for a large project in the current financial year, where our bottom line is fairly good. I can't disclose that. It will come up in the financial year number, but it is much, much better than last year. So it is just to add on a vertical. We are not going out of our domain, that is power sector. Here, UPS plays a key role in this IT computing sector. So we are taking the other product and doing the integration and giving a one solution to the government, where we are leveraging our infrastructure, our service network, our capability, everything. It's not just a supply, it's a commissioning, installation, commissioning, and the end use service for the 3 to 5 years. It gives us revenue for 5 years also, for as an AMC.
So this new segment gives you a revenue visibility of 3 to 5 years. Viewers, please note this, because a lot of queries had come for this business itself. But order book, that's what our last discussion was, Ram sir. And order book stands at roughly 284 odd crore rupees, and annual status is roughly 11 crores. Now these new order inflows, what is the guidance looking like? And if you could just break it down by sector to sector.
If you actual number as on date,
yeah.
I'll give actual numbers on date.
Sure.
Actual number order in hand is around close to 1100 crore, where we are likely to bill minimum 300 crore in this financial year minimum. And out of this, apart from this 1100 crore, we are having our bidding, which is under evaluation, is close to 1000 crore. So our numbers are very pretty on better side, on upward side, and at the end of the financial year, we are very hopeful we will be have better top line and bottom line compared to last 3 financial year.
Okay, so that's on the order book that we are looking at. Now coming to the main segment, that's the battery energy storage system. A lot of the industry players are, increasing their focus towards this particular segment. Want to firstly understand what is the competition scenario like? You're already setting up huge capacity plans in Haryana as well. So firstly, on the competition side of it, and second, when will this start, contributing to the revenue? If you can help us with the utilization levels and that as well.
I will discuss BESS as a overall. BESS in India is a totally a new subject for everybody. Anybody doing a strong claim, I can't comment on that, but it is a new subject for everybody in the market. Even for us, it's a new, but being as a power industry, as an electronic industry, we are into for last 20, almost close to 20 years. So as a power electronics manufacturer, we have a better stand in this BESS overall. So in our Haryana manufacturing plant, we are focusing on manufacturing 1.2 gigawatt capacity. If you talk of the business in a business case, how much business we can do from the manufacturing facility, there's a possibility of doing 1200 crore billing from this Haryana facility once we start using the facility more than 50% or close to, you can say, 80%.
Well,
This
that's
is we
please continue, sir. Yeah.
This is what we are targeting from our Haryana plant as a OEM of the BESS. Secondly, the project what we are having in our hand, that is Bihar government and the Karnataka government. This is under the active processing. We are in the designing and all agreement, everything is done. And we are targeting by next financial year, it will be commissioned and our revenue will start coming in.
Ram sir, I just have a follow-up question on the BESS segment. The revenue will start coming in, say, in the next 18 to 24 months if the plant gets commissioned in 12 months. So it's a wait period of 24 to 36 months?
No. We have mandate of doing within 18 months, but we have a target within self-target to do it within 12 months.
Okay, so there's an internal target for BESS. Okay,
Yes.
sir, this is a strategic question for you because I have been reading about your peers. Your peers are basically global players. Schneider is also there. All these players are there. But what sets you apart? Especially the question I'm asking you is because you're an Indian company, you're an inborn company here. Credentials at times matter also. You are getting almost 90% of your orders only from the government itself. Private market space, when you go, there will be more competition from the foreign majors. How will you differentiate yourself?
Tell you. There are two type of sectors in the market in India, tier 1, tier 2. I term this slide as a tier 1. We term our Indian companies in tier 2 sector, and we are among the top 3 in the tier 2 sector. As an Indian company, as a company size, we are too small compared to this giant. But as a product, we are competing, we are capable of competing with them. We are matching the all technical parameters, specification of the product. And I'll give you a few examples. Like recently, we have taken one order from Delhi Metro, from airport, from defense. This is something where there is an entry barrier for the Indian company. Only the multinational company can supply, can enter into this segment. But we are well placed now. As we have access to the technology, we are digitizing our complete internal procedure, internal activity, our operations. And the last mile reach is the most important for us to get further go aggressive in the market compared to MNC, because those people work again, so they are dealer partner. We want to go all out from our own network, what we have today.
Right. So just considering all of these capacity additions that are happening, and we'll see that flowing into your top line from the next 2 years onwards or so, I want to understand what's the kind of capex plan that one should be looking for from your company, and would there be more fundraising for these capex requirement?
Yes, we are having a very good increase plan in the future. Yes, capex planning will be there. Fundraising will happen, and by when it will it by I think by next financial year definitely. So once our this plant is active in Haryana, and once we start getting the rollout, I'm sure we'll go for the further expansion, for which definitely capex will be required.
Well, thank you very much, Ram sir, for taking out your time and talking about your company's growth plans, and best of luck for the future. Well, moving ahead, that's all, folks, for KYC today. And thanks for tuning into our show only on NDTV Profit. Stay tuned.